that was the first door opening into the world that like this world exists and this volatility exists. I can say about 80 to 90% of my profits are on the short side. This is what I'm going to do. This is it, no matter how long it takes. I do this or be homeless. I'm like, I'm going to do this.
All right. Hello, everybody. Today is Monday, the 25th of August on 2025. And today we are bringing on our man, Kyle Williams, as part of our Let's Bring Traders In That Do Things Differently Than I Do series, because I think there's a lot of value added there. I do one thing, maybe that can help people. Other people do other things, and that can help people too. And I always tell people the best thing you can do is take the best thing from all different kinds of people that you think are good and put it together, and you can be better than all of us. So with that in mind, welcome, Kyle.
Thank you. Appreciate you having me on. It's an honor.
Kyle is a trader that pretty young guy, under 30, has found some pretty good success trading the markets. As a young man, you've been doing this for what, about 7-8 years? Or
I started trading when I was 20 in college, so it'll be next June will be, I think, a full around 10 years.
Okay. And are you trading the same way now that you did when you started off, or?
It's funny you ask. Yes, in the sense that maybe the majority of the trade/strategies that I lean on to make the majority of my money, absolutely. But I say it's funny you ask because I had this revelation going into this year about a specific trade I took last year, and I tried to. It was my new biggest gain. It was essentially it was MSTR. I took it long from like 130 to I ended up selling at like 500 or so. It was my biggest gain of my career. I made like 600 grand on this kind of swing for like a month and a half. And I sat down going to this year and I was like, how do I replicate that kind of a gain, but doing so with the strategies that because that was kind of a one-off idea I had. It was almost like hunting a unicorn, right? And I just caught one. And I was like, how do I replicate that, but almost maybe monthly or weekly in like the small cap world that I trade? And I ultimately came to the conclusion that like with the risk appetite I have, the capital I have, the strategies I have, all in one, I'm like, I can't. I can't replicate that at the pace I'd want or at the frequency I'd want, given my risk appetite, but I can do it in swing trading. Because that's what MSR was for me. It was a swing trade that made me a couple 100% over a couple of months, which is, not a very common thing to do, but it got me super interested into looking into swing trading. And so since May, I wouldn't say full-time swing trading, but I started implementing swing trading very seriously in May and have had my accounts or my swing trading account be up 30% since then. And it's kind of the longer I do it, I'm like getting pulled to wanting to do this to almost say, let's say in 3 years, have my 99% of my trades be swing trades and have almost be my day trading where I kind of started be kind of a thing of the past to some degree. So
I think that's a pretty typical path, and as you build up capital, first of all, it's harder to put the capital to work as a day trader. Mm-hmm. As you get more capital. Second of all, the stress involved relatively.
Yeah. 100%
more with the day trading than it is with the swing trading. So, when we're young, we can deal with the stress and we're looking to build up capital. So we're trading more actively to try and do that. And then as we build up capital and we get a little older, you start thinking in different terms. So I think that's a pretty typical thing. I think it's interesting that you talk about given my goals and given that type of thing, and this is what I have to try and do, because I have found as I've gotten more into sort of the education / helping people to trade thing, that's a big part of it, Yeah. I say to people, and I always say it reminds me when I picked up guitar and I would hire a guitar teacher and they'd be like, well, what is it you're trying to do? And I'm like, what do you mean? What am I trying to do? I'm trying to be Eddie Van Halen. I mean, but as time went on and I started to actually play and learn guitar, I started to understand what that question meant, And it's the same thing, I think, with trading. What do you want to do as a trader? Well, I want to make a shit ton of money. Right? Okay, I get that. That's what we all want to do. But it sort of has to fit your personality. It has to fit your lifestyle. It has to fit your, there's different goals. There's different ways to getting there. Are you looking to turn 10 grand into 200 grand quickly? Because if you are, then clearly you have to trade highly levered instruments and you have to trade highly volatile things. And you have to be okay with the fact that you might be turning that 10 grand into zero.
Yeah, exactly.
Or is it that you're trading a piece of your retirement account account as an enhancement to, let's say, your long-term stock investments or whatever. And therefore, you're just looking to put up a nice return, 15, 20% on that. And if you're looking to do that, then, it's a different sort of process and a different way to cover things. Would you agree with that?
100%. It's the longer I trade, the more shocked I am how many just probably thousands of ways to make money or to attempt to make money in the markets. And like probably almost all of them will not fit your style or what you're looking for or your, how you want to show up in the markets, So like, I agree with you. Like traders just be like, I want to make a lot of money. Well, okay, here's $1,000. Now what? It's like, be more, I guess conscientious is the right word. Like, how much, what do you want to do it? How do you want to do it? What is your personality like? Are you risk adverse? Are you risk seeking? Do you have the time to even day trade or do you have to, position trade or invest? Like so many things. And then that really can narrow you down from there. And then you can really start dialing in on how you then want to approach the markets even further. So yeah, I totally agree.
Yeah. And I think that those expectations, help determine the psychology behind what you're doing as well, which we know is a very important part of it too. If you really think that you're going to turn $1,000 into $100,000 quickly, then, your psychology better be ready for some very volatile, returns.
Yeah. Tons of swings.
And like I say, the chance that $1,000 is going to turn to zero. All right. So why don't we get into a little bit about, so you're still primarily a day trader, it sounds like?
Yeah. I mean, when I look at the amount of trades, maybe in a given month or quarter or year, majority of the profits are coming from the day trading side or, I should be maybe more clear on like swing trading because there are plenty of swings I have taken throughout my career that maybe the idea originated from a day trade, but because I was able to expand on the thesis or the trade plan and because it maybe didn't happen in a single day yet, I was like, okay, well, I'll hold this as long as I need to. And it got me to take some swings, but I never really considered myself a swing trader. It was more like some kind of edge or day trading thesis I had that maybe took a week to play out versus just 5 hours, right? But the swing trading I'm taking, or I started doing in May, was really like from the get-go, these are going to be swing trades. I have no idea how long they could last. They could be a week, they could be 3 months. So the approach or the mental state going into it is different. But in general, like, yeah, some of my biggest trades, or at least some of my more favorite setups that have gotten me to where I am today, 100% day trading. And so it could be as short as 30 minutes. It could be as long as, 4 hours. But in general, it's the majority of my trades are absolutely day trades for sure.
Well, I'm sorry for my ignorance, but what is a swing trade? I hear that term all the time, and I really don't know what it is.
Yeah, my understanding is I know there's confusion because I have it too. It's like technically some people say if you even hold over one night it's a swing trade. If you're taking from,
Why is that different from just a trade?
Yeah, they're all just trades. Yeah. Yeah. So why? I used to take, technically, if that's the terminology, I've been swing trading since the year one. There was all the time. I was under PDT rule. I survived. My first account was $6,000. So I didn't have over 25 grand to take as many trades as I wanted. I only had 3 a week pretty much. And so what I started doing early on was like, I would take trades right into the close and then just trade them over or try to position myself for overnight for the move I was looking for to save a day trade. So it's like from early on, I never really even considered that a swing trade, only because in my brain, I'm a day trader and I'm just trying to save day trades through a silly SEC rule. I guess my definition is like you're holding for multiple days at the minimum. Ideally, a few weeks or a couple weeks, maybe even a couple months. But then doesn't it get to where if it's like a few months, it's position trading or trend following, right? So at some point it turns into, swing into position. But yeah, I would say maybe a week to 2 months, 3 months, it would be a swing trade.
It's a day trade that turns into a swing trade that turns into a trend trade.
Yeah, and then turns into a long-term investment.
Right. Usually the long-term investments are the ones that go wrong, right?
Right.
So you're going long and short a lot, or mostly long, or?
I've always been both, but where I've really grooved is the short side. But it didn't start off that way. But the very first like edge or consistent setup that I enjoyed or found profitability with was on the long side. But then very shortly after, maybe a month or two of being profitable, I immediately realized why I liked it, because I saw so many stocks panicking. Like part of the edge that I had was buying stocks that are oversold. And I realized I liked they were oversold because I saw them being oversold before they got there per se. So then I realized, well, why don't I try to short these things beforehand? And then so I started started to really get a good idea on that. And even to this day, that kind of idea of almost a reversion to the mean idea of shorting some of these stocks that have just gone up too much too quickly from a technical perspective is still one of the bigger edges I have, or the things that bring in money in the market for me on a day trading perspective.
So when you're saying that it's overbought or it's got that kind of thing, you're talking about on the day?
Not necessarily. It could, in fact, actually, I would say no. A lot of stocks in the small cap space will run a ton on the day, but a typical or very general trend I see happen all the time is that every short seller and their mother wants to short some of these things in the same day, right? But the problem is, like, when the trend, as short as the trend can be, like when a stock is strong during the day, like you almost, at least for me, I don't want to stand in its way. Like it's almost like standing in front of a freight train to some of these things. They will just go up. I mean, I think today there was 2 or 3 that were up 200% in a single day. And on the long side, it sounds exciting, but people who try to fight these things on the short side, get crushed. So for me, the key is like waiting for those. It could be up to 2, 3, 4, sometimes even 5 days where they will just go up every single day. Not hundreds of percent every single day, but maybe over those 5 days, it'll be up from 50 cents to $5. Or I think one of the biggest moves I've ever seen was last year. It went from 4 cents to $4, right? But it did it over 5 days, right? So that's kind of the move I'm looking for. So not just in one day, but maybe over a sequence of days. And then at some point, the party ends where it's not going to go up 50% anymore. It's actually going to go down 20, 30, sometimes gets ugly, like 40% a day. And that's that short selling. How do I know that is?
How do we know when that is?
Every runner has, I like to say every runner or stock that gets hot like that tends to have its own personal characteristics to where it's like you're almost meeting a new person, right? Like some of these stocks are based on news. Some of them aren't. Some of them are based on a like timely catalyst where it's like a sell news event, right? This one ticker last month, or maybe it was earlier this month, was waiting for like their phase 2 data trial to come out. And the moment it came out, it had leading up to the data getting released, it had run thousands, or not thousands, but maybe hundreds of percent. And then the moment the data got released, it dropped like 50% in that day. So like a sell the news scenario. Other times the stock is literally green on the day, every single day, and is not even once threatened or even touched like being down on the day, even 1% of the day. It's always been up above the previous close. And so the first time it could really, sometimes it really is that simple. The first time it's actually even trading red on the day is the first leading sign that, hey, this might be down 10, 15, 20%, 3 hours from now kind of thing.
Right. So the buy the rumor, sell the fact thing you use. Yep. Which is pretty classic. I do that myself for my trades. And there's super momentum high. And as soon as the momentum sort of stops, as indicated by its first down day, then maybe that's kind of where you're looking to sell it. And use the same type of thought process for something that you're long as well, or get out.
Not necessarily. I'm not as big of a reversion to the mean trader when it comes to longing the things. I do get the edge, or I do get the understanding behind it. I just tend to be more, and this is maybe why my personality is drawn to the short side. Because for me, I try to put myself in the position of the long trader. And so if I'm long something and the stock is going up and that is up, I'm up 200% on my position in a day or two. And the moment I start seeing that position go against me, I get fearful and want to just take profits and not give away my gains kind of thing. Whereas if I see longs panicking out to the downside, I find it harder to grasp or to get behind the idea that they're going to immediately rebuy when the panic is over kind of thing. Although I've done it plenty of times, but I will say I don't do it nearly as with much conviction or as frequency than I would shorting a overdone run versus buying an overblown sell-off, so to speak.
How did you do in 2022?
I did decent, but not as good as I wanted to. Kind of like you. So back what you said, some of the long-term investments are the ones that go bad. So 2021, I'd made, more money than I wanted to do with it.
Right.
Or to do with. And so I just took like, I think it was around maybe three-fourths of a million. So like 700, 800 grand. And I threw it into like maybe 5 to 6 stocks. And this was either late 2021 or early 2022. And just said, these are investments. Like, we're just going to let these ride. And yeah, that didn't pay off too well. I kind of watched those investments bleed all year long, to where it got to the end of I specifically remember it got into December of 2022, and I said to myself, I can either just keep blindly holding these things and hope they come back, which is never really, a good thing, right? Or I can take advantage of these losses and save some money on taxes. And so, I did that. I pretty much paper cut or ripped the Band-Aid off on all of them, lost like 400 grand, maybe like 4.5 or 450 grand, somewhere around there. Pretty much cutting my year in half. So I was on pace for a pretty good year from a short side perspective or short selling perspective. Right. But yeah, pretty much cut my year in half to end the year because I had some trades that were outside of my realm of understanding or strategy, mixed with the worst timing of all.
Right. Well, you thought you were being smart. It seems like a smart idea. And as with most ideas in the market that seem like a smart idea, it ends up being the death of you.
Yep.
Pretty typical. So most of the stocks you're trading here are small cap stocks. Is that right? Anything that I know? Any names I would know?
So where it gets interesting is when the characteristics of small caps enters maybe large caps. So yeah, 90% of my trades are going to be stocks that are $10 or lower. Market cap wise, they're going to be maybe $1 billion and lower. But there are some moments where some tickers will just get out of hand and they'll turn into 5 billion, 10 billion, right, etc. One of the most memorable one was SMCI when it went before it, reverse split. It went to 300 to 1100 in like 2 or 3 weeks, whatever it was. Right. And so that one was one where it got so overdone and so overblown, it replicated the same thing I look for in small caps. And so I do remember shorting that around maybe 1,550 somewhere there and covered like 900 somewhere like they were there. It's one of my bigger gains at the time. Right. It was either early 2024, right? Yeah.
Uh-huh.
Yeah. So stuff like that. So that's where it gets fun, where I will trade large caps on the short side, but they've got to replicate what I'm already looking for, in the small cap world, which happened. And it's almost like I tell people I don't trade small caps necessarily because I like it. I trade it because that's where most of these overblown, movements happen, right? If they happen in large cap every single week, like I'd probably be a large cap trader. But because this overblown, overhyped kind of mini bubbles occur so often in small cap that it's just much more frequently popped up there,
So it sounds to me like a lot of your trading is on the short side.
I can't speak entirely on the number of trades on the short side, but I can say about 80 to 90% of my profits are on the short side, for sure.
Interesting. That's interesting. What brought you to this style of trading? Did you read about it? Or was it just trial and error? Did it just something that you thought made sense?
It was, well, let's just say trial and error, but it was really just one trial. I watched the movie The Big Short in summer of 2016, and I was so naive. I knew what long-term investing was. Like I had a mutual fund that I just put money in for fun, like allowance and then part-time job money. But then once I realized that this whole 2008 financial crisis occurred, I was like, wait, did my, mutual fund that I owned as a teenager, like totally just dive bomb 50%? And it did. It was back, luckily it was back to, highs by that time. But yeah, I was just so oblivious and I realized I need to learn how to like protect myself against that, which then led me to watching that movie. And I knew they were making money with money, but I didn't know, I was so new and I didn't know what trading was. I didn't know the terminology trading. I just knew they were taking money and making more money. And so once I got to that part, I then bought like, it was like Day Trading for Dummies or just Trading for Dummies, like the series. And there was this chapter in there that mentioned penny stocks or small caps, but there was a caveat to it. There was like warning, don't even look into these. There's a bunch of, risks involved. And I was in my naive brain, I was just like, what's the difference? Like whether it's, 5 cents or $5, like why is there so much hesitancy in this book? And so that's what got me to Google penny stocks. And someone back then, even now, who does a lot of marketing, like Tim Sykes popped up, right? And all his videos started popping up for me and like what he trades and how he trades it. And then that was the first door opening into the world that like this world exists and this volatility exists. And whether it was just lack of wanting to trial and error, I never even really looked into other markets since, obviously I've gotten more diverse since then, but like early on, it was like, yeah, let's just go into this market and give it a shot. It's like, I didn't know futures existed. I didn't know options existed. I didn't know Forex existed. It was just kind of like, here I am. It worked out for the better, but yeah, and in another universe, it totally could have been something where I would have had to do some digging and find a whole other market to find another edge. So
a lot of people want to make money day trading. A lot of people have read Tim's or read or listened to Tim Sykes stuff.
Right.
Not a lot of people have had the success that you've had. Why?
I think I'm a little nuts.
Okay.
I think I'm a little crazy in the head, where I remember going through the learning curve and just really failing. I mean, talking about, like you said, talking about trying to grow an account super quickly and super fast and at extreme returns. I mean, I was lucky. I developed risk management pretty early on, so I never truly blew up my account. But in a couple months, I mean, that account was down 70%. In a matter of 8 to 10 weeks. But in those moments when I was failing and wanting to quit, I kept asking myself, I was like, what would you rather be doing? And at the time, this is when my dad's telling me I need to get a job, or I need to start getting, internships through college and making it happen. Like, you're not going to, he didn't think trading would be a career, but he definitely didn't think it was going to happen. Right. He was just like, if I made $50, he's like, that's great, but that's not going to pay the bills. Like, go find a job. But for me, I just have this.
What a dad's know.
Yeah. And I understand where he was coming from, but for me, I just had this overwhelming drive to be like, this is what I'm doing. Like, I almost had like this insane fear, or not in fear, but this irrational thought that I was like, would I do this or be homeless? I'm like, I'm going to do this. Like, obviously I would never make sure I'd be homeless. Like, I would eventually get a job. Right. But I just had there's this almost crazy thought of like, this is what I'm going to do. This is it, no matter how long it takes. Now, obviously, just stating that isn't enough, right? I had, I kind of did everything I could to make it happen, right? I listened to every podcast, every book, the Market Wizards, right? I read all of them. Obviously, you're in one of them, right? So again, more podcasts, more videos, video lessons, webinars. I mean, the thousands of hours of screen time, and then just applying that, right? Not just watching. Like, I almost did it to the point where if I ever caught myself watching, let's say, 4 hours of content somewhere, and in hour 2, I was tired and I found myself not paying attention, I said, okay, you need to stop and come back when you're ready. Like, not just getting through it to get through it, but really quality, focus, to then have the best chance of actually applying that knowledge, when it's time to actually click the buttons and start trading. So I think a mix of all those things, just kind of putting my head down and making sure I'm doing it right, got me here.
Worked hard. I get a lot of people saying to me, like, just teach me how to trade and make money. I'm like, no, I can't do that. I can teach you things that I have learned. I can teach you lessons about the markets that I have learned that are maybe a little bit different than you will hear anywhere else. But you got to put in the work. Otherwise, you're not just going to start making money because Jason Shapiro, the guy in Market Wizards, taught you a couple little tricks. And, like, that's, people don't want to hear that, but that's just dead ass fact. And it's true about anything in life, right? You're not going to put in the work. You're not going to have very much success. And even if you put in the work, you might not have success, but first.
As a teacher, I'll tell people, like, you can learn from me, but everything you're going to learn from me, you will then have to experience in the real world and learn it again. Like, it's what you can hear it all the time from me, but until you then experience that said lesson or that said, mistake, then it can be like double down on like, oh, this is what Kyle meant, or, oh, this is why he said that. And then the lesson finally solidifies. But until you do both really, or do it numerous times by yourself, you're going to run every mistake in the book, No,
that's right. You make most of your money shorting, I find, is interesting. Not a lot of things have gone down the last 2 years.
Yeah. It's been quite the ride.
So where have you been? I mean, I do see some stocks that have gotten crushed in the last 2 years. Mm-hmm. And I assume you're not just shorting for the hell of shorting. You're waiting for some sort of market signal to tell you, which probably has to do with something of the market going down. Like you said, either it fails on good news or it starts to go red, or whatever the hell else. It goes below a moving average. I don't know what you do, but am I right in assuming that there's something that's telling you that it's going down before you're just shorting it?
Yeah. I mean, there's
otherwise you could have been getting run over on some of these things.
Of course. Yeah. Well, and that's partially why I really have, one, I found small caps, but I stayed in small caps because some of these companies, it's almost like because I know what you mean, like the market's we've been on such a strong bull run. I actually like that because in 2022, the markets, at least in small caps, the opportunity was not as plentiful. When the overall indexes or the overall markets on a broad spectrum are strong and in a bull market, a lot of these smaller caps get the confidence to even run in the first place. Where in 2022, it took a lot of other factors, whether it was like a geopolitical thing. Like I know in 2022 when Ukraine and Russia kind of started colluding or started bashing heads, oil prices skyrocketed. So all these small cap oil companies that really didn't even have a business in oil, but just attempted to be in the business in oil, started going up hundreds of percent. So when those died, then they went down 80% over a month. So it's one of those things where if we're in a bull market, we can get stocks going up just because. But if you look under the hood of like, well, are they even fundamentally sound? Why are they even up? A lot of them are just up on thin air, really. There was one, I think this was late 2023. And some of them have very cool stories. Like some of them sound convincing, but when you do the digging or you kind of look at the story as a whole, it's like, wait, this company is not going to stay up here, from a fundamental perspective, which is again, a whole other maybe inverse investing thing. I'm not shorting these for months, but there was a company called SHOT, and their entire business model, their product was that they sell like these mini shot drinks that cure your hangover instantly, or like with quicker than anything else on the market, which again has never been heard of, never been proven. And there was no scientific backing behind this product, right? It was all hype. I think the CEO like tried to collab with celebrities and go on TV shows and all these cool things and host these parties. And yeah, the stock went, I think, from like $1 to $7. Right. But behind it, there was nothing more than just hype. And so once the hype died down, I think it went from like 6 to 3 in a single day, you know? So it's just all about that timing. And if you could be there for that, there's some pretty sweet moves that air just flows right out of them.
All right. So I'm starting to see the picture. I know people that do similar things. There's a guy I know who was very involved in the penny stock market, who was younger, and it didn't take him long to figure out that a lot of these stocks were scams. Yep. They get run up by the promoters. Yep. And after they run up and all the sort of suckers are in it, they're going straight back down to zero. So he developed a process where he does that. He watches these things run up, and he saw it originally from the bad side. He was a penny stock broker. He was getting all these people into these stocks, and then all these stocks were collapsing and going to zero, and all his clients were losing money and cursing him out. And he came to the conclusion of, well, why not take the other side of that? Which has done well for him. He lets these penny stocks run up. He knows where they're going to go because he knows that they're a bunch of air, as you say, and he starts shorting them. There's
even some scenarios where it's not even like penny stock scams, but just super misinterpreted like market fundamentals, right? So like, example that comes to mind is the ticker DXYZ. They have a cool business model, but it's not practical in terms of trading if you get inefficient, it is. So what they were, or what they are still, they invest in private companies and then just are a publicly traded stock. So they own like Discord, they own Epic Games, they own some other big company, but the biggest holding of them all is they own SpaceX. And so when they IPO'd, everyone and their mother was like, I want to own SpaceX. But the thing is, with owning private companies, they don't trade. So they only own, the DXYZ company only knows they own them at the price, at the net asset value that they own them. So legally, under the SEC, like they have to file where their net asset value is as a company of DXYZ. And at the time, it was at like $5. Like legally, how much money they have invested in these private companies, it's $5. But because they had the SpaceX hype, I mean, I think at the peak, DXYZ went to like $100, in like 2 or 3 days. So, you could either invest in SpaceX at a 20x valuation, or you can, be logical about it and realize that either I just don't invest in SpaceX or I wait for it to come down to more reasonable prices. And I think that the day I shorted, it went from like 100 or like 95 to like 60, So it's one of those, sometimes their scenario where they are legit. They do mean to do well. They want to do well, but the fundamental value there gets just overblown and it just gets very inefficient,
So it's not just, I like to hear this. It's not just, if you guys listen to what he's saying, he knows his company. He knows where the weakness is. It's not just, hey, this thing hit its 200-day moving average, or this thing's RSI is 80, or this thing, all these kinds. Right. He knows what he's talking about in terms of, and by he, I mean Kyle. He knows what the company is as well. He's doing his homework. He's doing work. He's not just sitting here looking at charts and punching around. You know,
Yep.
he has a target. This company is overdone because I kind of understand what they do, and I understand the hype is overhyped involved here. So now I'm looking to short it.
And don't get me wrong, there are like, technical indicators I will look for to give me the entry I'm looking for.
Of course.
But the best ones are the ones where it's not just technicals and it's not just a story. It's like both align. And now I know I'm getting the entry I want and it's on a company that's already overblown for XYZ reasons. Yeah.
Right. I think that's important. I like it. I like it a lot. All right, cool. That's really cool stuff. For those who don't know, on Saturday, September 13th, we're doing a webinar that everybody's invited to that Kyle is going to be a part of. It's me, it's Kyle, and it's Lance Britstein are going to be giving presentations in this webinar. That will give Kyle a lot more time to get into what he does and be a lot more specific about what he does, I believe. So I would invite everybody to check that out too. I think there'll be links in this video or whatever, however we do that you can check out. But I'm looking forward to it because it sounds to me the first time I've ever talked to Kyle. And he sounds like a smart kid to me. It sounds like he knows what he's doing. And I guess his returns have proven that. So that's what we like to do, is bring on traders that are smart about this and who have good returns over time. And what I really like to do, like I say, is bring people on that do things differently than I do. There's only so much you can learn from me, right? So let's bring other people on that do other things. And clearly, Kyle does something different than me. I don't do anything that looks anything like this. I love it. Cool. So we look forward to that, Kyle. Thanks for this half-hour introduction.
Of course. Thanks for having me. I'm excited for the webinar.